Hello, hi. Am I audible and visible properly? Are we good? Yep. Looks like we are good. Sorry for the late. Hi, Ramakrishna. I saw your comment here. So sorry for the delay. There were a couple of guests today in the office. We spoke and was so tired. Couldn't take the class on time. Sorry. So, shall we start? We are to finish money and banking classes to money and banking class today. I just got a message from someone stating that they have friends in DOPT department and CGL is postponed to October. I don't know if this is true or not. I just got someone's DM and class start అయ్యాక ఇప్పుడే ఓపెన్ చేశాను నేను. I just opened that DM just now. Right. So yeah, let's start with today's class. Do you all remember the functions of money? Right? We completed till what is bank rate and repo rate. So let us quickly revise. Please tell me what is repo rate. In repo rate, who gives money and who lends money and who borrows money in repo operations? In repo operations, who lends money and who borrows money? Who lends money and yeah, bank gives money. Yes, bank lends money. Yes. You're all good. So now the next thing that we are going to talk about is about CRR and SLR. We are going to talk about two different words, that is CRR and SLR. Before I get into CRR and SLR, I want you to tell me something. See, for example, let's say just a moment. Let us assume that we have a loan. Okay. Yeah. Now let's say you are a person A and you took 500 rupees from your friend. Is this a asset to you or a liability to you? I want you to tell me, is this an asset or a liability? You took 500 rupees from your friend. So is this an asset or a liability? Liability. But now there is bank. There is bank. Bank gave out 500 crore loans to various people. And bank has 600 crore rupees as deposits. 500 crore rupees as loan and 600 crore rupees as deposits. Now tell me, which of the following is the asset for the bank? Which of the following is an asset to the bank? Anything that you are bound to pay back is called as liability, Yasin. Yeah. So tell me, which is a liability to the bank and what is an asset? Yes, as Ramakrishna rightly says, for a bank, all loans that a bank give out are called as loans or called as assets. Can someone tell me why is it so? Usually, if I take a loan, it is my liability. But why is this an asset to a bank? Why is this an asset to a bank? Yes, you will get interest on it. Not just interest on it, you don't have to pay them anything. They will pay you money. Along with interest, they will pay you money. So, this is called as asset to the bank. So, for a bank, all the deposits or a bank, all the deposits are called as liability because bank is bound to pay back the money. Bank has to pay back the money, so all those are called as liabilities. All the deposits in a bank are called as liabilities. Now in a bank there are usually in a bank there are two types of deposits. One is time deposits, the other is fixed deposits. One type of deposit is called as time, the other type of deposit is called as fixed deposit, right? So time deposits are those deposits, let's say you can withdraw at any point of time. For example, my savings account, in my savings account I have some x rupees and I can withdraw at any point of time. It is a time deposit. Whereas I deposited some money for a fixed period of 5 years. These are called as fixed deposits. Usually, any bank, let us say a bank has 6,000 crore rupees in its bank account, let's say there are 6,000 crore rupees of deposits. From these deposits, usually banks give out money. Usually, banks give out money from this deposit. Let's say out of 6,000 crore rupees, a bank can give out 2,500 crore or 4,000 crore, at times 5,500 crore. Now, imagine a scenario. Hi, Nitin Point. Yeah, imagine a scenario where you are a bank, you have 6,500 crore rupees in your deposits, and you gave out all the 6,500 crore. Out of nowhere, there is sudden panic situation in the country, and everybody starts coming to the bank. This scenario is called as a bank rush. If everybody starts running towards a bank, as a bank, can you repay them? Can you repay them? Can you repay that money? So if you can't repay, what happens? Bank will go bankrupt. There will be chaos. People will start pounding the bank authorities. This is going to happen, right? Yes, banks will collapse. So in order to avoid that kind of situation, what usually any bank has to do, that is a rule, is that let's say you have 6,000 crore rupees as deposits. Among this, you have to keep some money with RBI. You have to save some money with RBI. Let's say out of 6,000 crore rupees, you have to keep 2,000 crore rupees in RBI, and you have 4,000 crore in your hand. With this 4,000 crore, you play any damn game that you want to. You can play any game. You want to loan it, you want to invest it, you want to do whatever you want to do, you can do in 4,000 crore. But you cannot disturb 2,000 crore rupees. So that in case if a bank goes bankrupt, in case there is a bank crash, in case anything unfortunate happens, then also you have a cushion money. Of course, you cannot use it as you wish. If you want to use this money, then you have to pay certain penalties, etc., etc. But there is a cushion money that is there for you. So this cushion money that is there, the total money, the total deposits in your bank, you call them as NDTL, net, that is total demand, net demand time liabilities, that is the total amount of money that a bank has to pay back. You call it as NDTL. Now out of this total NDTL, a bank has to save certain amount of money. Okay, in what form, what is it, we will discuss. But there is certain amount of money that has to be stored. This money is stored in the form of two ways. One is CRR, second is known as SLR. These are the two ways in which money is stored by bank in RBI, and the amount is decided by RBI. For example, let us say today the CRR is 4% and SLR is, let us assume, 21%. Tomorrow banks can come, or RBI can come and say, from tomorrow onwards, CRR is 45%, SLR is 30%. RBI can tell this. If RBI says so, then it is a must for a bank to put that money in RBI. Now, let us assume you have a scenario where there is inflation going on in the country. There is heavy inflation that is there in the country. So RBI wants to take money from banks. It wants to pull off money from the bank. It wants to pull off the system. Then what should it do for CRR? Should they increase CRR or decrease CRR? Don't worry, what is it? I'll tell you. First, let us understand how it works. So, should RBI increase CRR or SLR? It should increase, right? Okay. So, CRR, SLR, if you are increasing CRR or SLR, will the impact be immediate or gradual? Immediate impact or gradual impact? Will the impact be immediate on a bank or will it be gradual on a bank? Immediate impact. Now, out of the two options, that is, you have CRR, SLR option, you have a repo option. There is inflation in a country. RBI wants to control the inflation, which is a hard measure, which is a easy soft measure, which is soft and slow, which is soft and smooth, which is hard, which is soft and smooth. Think of it. No, 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 Satya. CRR, SLR are hard measures. The impact is immediate. This is mandatory. Okay. In banking terminology, something is hard when bank is forced to do it. So, acha, you understood the word in a wrong manner. CRR, SLR are hard, which means they are harsh. Here, hard means harsh, not hard to implement. So, CRR and SLR are harsh and hard measures, whereas your repo operations, reverse repo operations, etc., are smooth operations. Okay. Once upon a time, RBI used to do CRR and SLR based operations, but today it is not doing any CRR or SLR, it is doing repo operations. Now I will tell you what is CRR. The full form of CRR is simple: cash reserve ratio. The meaning of this is you should keep this money in the form of cash. Let's say 4%. So there is State Bank of India. State Bank of India's NDTL is, let us say, 5,000 crore rupees. NDTL is 5,000 crore rupees. Of this, you need to put 4%. It is mandatory. You don't have a choice. So you have to put 200 crore in the form of cash with the Reserve Bank of India. There is no choice for you. And RBI will not give you any interest for CRR. Because you park 200 crore in RBI's account in the form of physical cash, they will not give you any interest. This is called a CRR. So CRR is cash reserve ratio. It is parked only in the form of cash, and it is mandatory for a bank to place it. There is no interest that is paid by RBI to the banks on CRR. So is CRR clear? CRR is clear, right? Cash reserve ratio. Yes. The next word is SLR. Statutory, statutory liquidity ratio. Statutory liquidity ratio. So statutory meaning is by law. By law. Okay, it is also compulsory. It is under the Reserve Bank of India Act. You have to do this. Liquidity in the form of easily liquidable material, not just cash. You got cash in a word. Sorry, you don't have the word cash here, right? So it is not compulsory for you to park it in the form of cash. You can put cash. You can use gold. You can use government securities. You can use treasury bills. You can use any kind of money that you have, and even SLR you must park it with RBI. But the only difference between CRR and SLR is, number one, CRR is cash only. For SLR, you can have cash, you can have gold, or you can also have government securities, you can have T bills. And for CRR, there is no interest, and for SLR, there is interest. And both of these are placed with RBI only, and both are decided by RBI. Both are inflation management tools, but today RBI has stopped using CRR and SLR as a tools for inflation management. Once upon a time they used those tools, but today they are not using those tools, right? So this is about the monetary policy part that we have to talk. Now we will look at the notes. By the way, those who are here and who are our old batch students, did you guys receive your coupons, etc.? Because the last I was told all the coupon work is completed. So did you guys receive your coupons for the upcoming full course that is there? I have Sindhu here, Satya here. I think there are a couple of other students also who are there in our past classes. Can you please confirm? If not, please let us know. We will process it so that we will have our new batch that is starting from 15th of September. We will start the classes, right? And on YouTube, we will be shifting towards the question series for the upcoming exam. No, the purpose of BrahMos is for 2026, Satya, for not for mains. Okay, if by chance we get more time for CGL 2025, then by the time of mains we will complete it. Yes, the foundation batch is BrahMos batch, Rajeshwari. We have a foundation batch which is starting from 15th of September. We have a foundation batch and the classes will commence from 15th of September. The course is published. We will give you the details on YouTube mostly in the next 2 days. I guess it will be out on day after tomorrow or something like that. We will announce the details as well, and it will start from 15th of September, and this will have both foundation, and starts with foundation and it is still mains. It's a one stop solution kind of a thing. So Satya, did you receive your coupon as well here? I think Sindhu is done. Okay, so this is about the coupons that I just wanted to confirm. Okay, now we are at reverse repo, repo, etc. Bank rate, CRR, SLR are completed. Next is call money. There is one interesting phenomena called as call money and money market. Basically, so we are old, so at any cost only in 2025 we are hoping. Acha, then it's great, Satya. No issues. Just a moment. Okay, the testing for this class is also updated in the description. Right, let's get back about the money market. See, with respect to money market, there is something that is very interesting. As I told you, banks have to maintain CRR and SLR, but at times they fail to maintain this value. On a daily basis, they must maintain CRR. On a given day, let us say there are heavy deposits. If there are more number of deposits, bank has to keep more amount of money through CRR and SLR. But unfortunately, let us say on a particular day, bank does not meet the targets. On that day, a bank can call the other bank and they can ask for immediate adjustment of funds for that one night. The market where this happens, the short term borrowings, it could be for 1 day, 1 week, 1 month, up to 1 year. The market where short term borrowings happen, that market is called as money market. Okay, that market is called as money market. Usually, at the end of the day, that is at the end of the night, if your bank is not able to fulfill your CRR and SLR, then you will call up the other bank who has a surplus money. You will ask them for adjustment of the money and you will pay them back the next day. So on call, you are arranging the money for one night. So such money is called as call money. Call money is usually the money that is borrowed for 1 day. And generally it is taken by the commercial banks who fail to meet their CRR requirements. So this is about CRR and SLR. Then there is one more thing called as open market operations. See, of these three, that is about the inflation targeting measures, we saw two different kind of operations. One is CRR and SLR. In the next step, we saw repo operations and reverse repo operations. There is a third mechanism which is known as open market operations. In the sequential order, let's say if this is the hardest method, that is the harshest method, and this is the softest method where you are allowing market to operate, and the order falls like this. In the highest position, you have CRR, SLR. In the middle, you have repo and reverse repo. And at the end, you have open market operations. Open market operations are very, very smooth operations where you are allowing the market to behave on its own. What is open market operations? Open market operations is very simple. You are buying and selling in the market. For example, there is Reserve Bank of India. I told you all banks need government securities. If they want a loan, they need government securities. If they want security, they need government securities. So let's say there is lot of inflation and there is not much of inflation. Let's say our target is 4%, but it is at around 5%. So for this 1%, Reserve Bank of India decides that I will not disturb repo and reverse repo because it might disturb the entire bank business ecosystem. So what I will do is, I will do open market operation. That is, RBI will say, I am buying all the government securities. I am buying all the government securities, or RBI can come and say, I am selling all the government securities. For example, let us say RBI said, RBI said, I am buying all the government securities because of, let us say, there is Vijayadashmi coming up or some other festival coming up. Earlier on government securities, the interest rate is 3.5%, but on the eve of some festival, I am buying the government securities at 8% interest rate. Now tell me, there are banks, bank 1, bank 2, bank 3. RBI is buying all the government securities. Who will get money? Who will get papers? Who will get money? Who will get papers? We will start it from tomorrow. Expected question series will start from tomorrow. RBI is getting papers and banks are getting money. Money. RBI is getting the papers and bank is getting money. So you do this to increase inflation or decrease inflation? When do you do this? Inflation increase or decrease? Let's say you did this earlier, the inflation is 4%. Now you did this operations. What can happen to the inflation? It can become 5%. It can become 5% because you are putting a lot of cash into the banks. You are supplying money into the banks. Exactly. So basically, from RBI, because of any operation, if money is going out, then inflation will increase. If money is coming into RBI, then inflation is bound to decrease. Is this clear? Now you have CRR, SLR, Repo, reverse repo. Okay, I'll be a bit clean. Okay, CRR, SLR, Repo, reverse repo, open market operation buy, open market operation sell. Okay, you have these operations, and you have all these operations. Inflation is at 4% and government wants to bring it down to 2%. What are the measures that a Reserve Bank of India will take? What will it do to CRR? What happens to SLR? What can be done to repo? What happens to reverse repo? What is done in open market operations? You please tell me. After this class, I don't want any of you to mug up anything. Yes, increase CRR, very good. SLR? SLR is also increased. Reverse repo is increased. Repo is decreased. Yes. What is done in open market operations? Buying or selling? Yes, you sell. So this process is called as inflation management in India. This process is called as inflation management in India, and inflation management is done by Reserve Bank of India through a policy every year, which is known as monetary policy. Monetary policy. The policy or the procedure through which the Reserve Bank of India handles the inflation is called as monetary policy, and earlier this monetary policy was decided solely by Reserve Bank of India governor. Reserve Bank of India governor used to decide the entire monetary policy, but there is a committee known as Urjit Patel Committee. Urjit Patel Committee recommended that why only Reserve Bank of India governor? Let us create a committee. Let us create a committee of 6 people. 3 are from RBI and 3 are from the government. Let these 6 people together decide what is the monetary policy. Usually in monetary policy, RBI tinkers with repo rate. So repo rate is also called as policy rate. Usually RBI handles repo rate, and all the other rates are fixed to the repo rate only. So today, all the monetary policy is handled by a committee. This committee is known as Monetary Policy Committee. The head of the committee is the Reserve Bank of India governor, but the repo rate or policy rate etc. is not decided solely by the Reserve Bank of India governor. It is decided by the entire committee together. So this is about inflation management, monetary policy. So there are two different tools. One is quantitative tools, where you are talking about numbers. In quantitative tools, you are controlling the amount of money that is there in the economy. So in quantitative tools, that is number, you have repo rate or reverse repo rate, etc., where you are trying to control the quantum of money that is there. CRR, okay, SLR, all these come under the same tool, even open market operations, etc. Now there is one more tool that is there, which is qualitative tool. This is quality work. In qualitative tool, you are not reducing the number directly. For example, let us say you come to the, I mean, RBI governor comes and he sits before the media and he says that banks need to work on this, or government might bring a policy on semiconductors, so banks should give more loans towards semiconductor industries. So this is an indirect influence. RBI governor has got a lot of weightage in this country. If something is said by RBI governor, then it is considered very seriously. So RBI governor can come and say, this is our policy, so you please lend more money to a particular sector. In this manner, if RBI governor is trying to influence the banks, it is called as moral suasion. This is a previous year UPSC prelims question, where they ask you, moral suasion is a tool or not. So RBI is persuading the banks to do this, or RBI can say banks must do this. There is a type of loan called as PSL loans. I'll tell about it, don't worry. It is called priority sector lending. There are certain sectors in this country where government wants banks to give loans to them. It is mandatory. X percentage of the loans must be given to those sectors. That is called as priority sector lending. So government can say to the priority sector, for example, to the education sector, you must give 30% of the loans. Whatever a bank is giving out, whatever loans a bank is giving out, you must give 30% of these loans to the education sector. So they can mandate this. This is called as priority sector lending, right? So this is about priority sector lending, qualitative tools and quantitative tools, and the entire whole story of your monetary policy and monetary policy committee, right? So I told you what is call money market, all these things are discussed already, the participants of the call money, etc. We were talking about monetary policy committee, the group of people that decide the monetary policy. You call it as monetary policy committee. There are 6 members. 3 people are from RBI, 3 people are from government. From RBI, you have RBI governor, you also have deputy governor, and there is one more official from the side of RBI. 3 people are appointed by Government of India. Now everybody has one vote. In this way, government also has a say in deciding the repo rate or in deciding the policy rate. That way, government is also involved in inflation management and inflation targeting. So this was all triggered by the Urjit Patel committee's recommendations, where they wanted to set a 4% target. Earlier, Reserve Bank of India was not functioning with a specific target, but today RBI has a target that is 4%. You can cross at max by plus or minus 2%. That is, you should maintain inflation of this country between 2% to 6%. If you fail to maintain this, you need to give an explanation to the government saying that this is the reason and these are the problems. This is why we are not able to maintain this between 2 to 6%. And they should also explain what are the measures that they are going to take to control back the inflation. So this is all about monetary policy, and there are 10 practice questions on this topic which you can practice after the class. The PDF of this is also available in the Telegram channel. If I am not wrong, the link of the PDF is available in this video's description. If not, you can check out the Telegram channel. You will get the link. Okay, and as far as the expected question series is concerned, we will start expected question. Urjit Patel is ex-governor of RBI. He's a governor of RBI once upon a time. So as far as the expected question series is concerned, we will start expected question series from tomorrow. From tomorrow, we will start expected question series based on the important topics, and all those questions will be based on it. They will be framed based on steno paper. So we will have questions. I will make you solve the question and I will explain the theory that is there around the questions, and we will give you one revision notes for this as well. So this is the plan with respect to expected series and the other topics, etc. The detailed discussions. Anyways, we have our course which we are going to start. So we will do them as a part of our course from foundation and all. Okay. So that's the plan. Now we are talking about banking sector related reforms. See, there are certain sections of RBI. Yes, he was the RBI governor. Yes. Yes, he is recently appointed as IMF director. Yes, Urjit Patel. Yes, yes, the same guy. Yes, that guy. Demonetization, Urjit Patel. You got him right. He is the RBI governor at that particular time. Right. So now the last topic that is there in banking sector, which is important. They are asking you questions on this. In steno, there were 2 questions on this. One is, both the questions were on Narasimham Committee 1, Narasimham Committee 2. But on the whole, I will explain you the topic of banking sector and banking sector related reforms, how the whole process came up. See, Indian banking sector went through multiple stages of problems, multiple stages of reforms. Initially, banks are seen to be elite sector. If you saw any old movies, etc., bankers used to wear a lot of heavy clothing, suits, etc. They used to travel in the car, and a banker used to have a very professional image, and they are not reachable to common people. That is how banking sector used to function in the earlier days. So over a period of time, the problem that came up is that because of lack of integration of common people into banking sector, common people were not able to access money. They did not have access to credit. So because of all these, what government thought is that whatever happening is wrong. Banking sector should not be there in the hands of private sector. Government should take up banking sector, and government should start promoting the brick bank, that is physical bank, in multiple places. Government has to increase the spread of the banks. Government has to reduce, if necessary, the expenses, the salaries of the bankers, and they should work for the welfare of the people. So with this mindset, the initial set of reforms were introduced in this country. So as a part of the initial reforms, what government did is government started nationalizing the banks, meaning which government said that there are no more private banks. Whatever banks are there, government is taking them up. In this manner, government nationalized the banks multiple times. It nationalized all the banks twice. After that, over a period of time, even private banks are allowed in this country, and today we have private banks. We also have foreign banks in this country, etc., etc. So that was the first step of the banking reforms. So after nationalization of banks, government focused heavily on increasing the number of bank branches in various district headquarters to mandals to villages. So in this manner, slowly and steadily, a number of banks were improvised, and India went through a major economic change in the year 1991. Till 1991, Indian economy is a closed economy. The most common nickname for Indian economy is the license Raj and permit Raj. What initial days of the Nehru government, the socialist government of India, thought is that we need to protect our industries, we need to protect our economy. We cannot have foreign companies coming into this country in the original stage, because India was already looted by those players for multiple years, for a long period of time. It was done for a very long period. Looting was done for a very long period of time. Indian industry was destroyed. Indian industrialization was destroyed, and we were not in a position to compete and fight with the foreign players. So what initial days of the government of India's thought is that we need to protect our industry. In order to protect our industry, they said that we are closing our economy. We are not allowing anybody to come and invest in this country. So to that extent, it was good. But what happened is that the measures that were taken were very extreme. They were extreme to a point where government started deciding how much amount of production should be done by a particular industry. Let's say you are a car manufacturer. Forget car manufacturer. Let's say you are a watch manufacturer. Government will decide how many watches will you make. Government will manufacture bread. Government will maintain hotels. Government will be in every industry. You have to take a permission for everything. labor unions were very strong. You cannot shut your industry the way you want to. Even today we have this problem of exit in this country. You can enter a business in the country, you can't exit so easily. So the entire banking ecosystem was ridden with a lot of problems. Entire economy was basically ridden with a lot of problems. And a point came where in 1991, India faced a major crisis which is known as balance of payment crisis. That is, we did not have enough money, enough dollars, enough gold to pay for the imports. We were importing products, but we did not have enough money to pay back. At that point, India went to IMF asking for a loan. As we went to IMF granted loan, but the loan was attached with certain strings or certain conditions. The primary condition is that if you want a loan, you need to open up your economy. You need to allow foreign players. You need to regulate. You need to relax your regulations. You need to remove the license and permit system. So in that manner, for the first time in 1991, Government of India introduced certain reforms which are famously known as LPG reforms: liberalization, privatization, globalization. These reforms are also asked in steno, and you can expect good number of questions on this. So LPG reforms were introduced in 1991, and at that point of time, Prime Minister of this country is PV Narasimha Rao, and Economic Minister, the Finance Minister, is Dr. Manmohan Singh. After liberalization, privatization, globalization was done, that is, foreign players were allowed. Government of India's motto now is to slowly pull back from occupying industries, from setting up industries, and it has to give space for the private sector. Slowly and steadily, private sector has to come, and government has to stop taking loans from banks, and the space should be given to the private players, and we should start producing and we should start exporting to the international markets. So that was the plan, and in 1991 LPG reforms were introduced. After LPG reforms were introduced, what Government of India realized is that whatever banking sector, whatever banking related rules and regulations that we have, these rules and regulations are suitable only for the earlier license Raj and permit Raj system. So government wanted to improvise the banking system. For that purpose, they appointed a committee called as Narasimham Committee, who is also an ex-Reserve Bank of India governor. So first Narasimham Committee was set up in the year 1991 after LPG reforms, and the second was set up in 1998. The major problem that is there in front of the banking sector till that day is, one, banks had very low profitability. As I told you, banks were all nationalized. After banks were nationalized, banks were given rules. Banks were told you must grant, let's say, 70% of your money to agriculture. You cannot lend 20%, more than 20% of money to an industrialist. You must lend 50% of your loans only in remote areas. So in this manner, there were a lot of rules that were imposed on the banks. Because of all those rules, banks were not getting much profits, and the assets of the bank had very bad quality. As in, there were collaterals that were pledged with the banks, but the quality of the collateral, that is, people were not paying back the loans on time. So the asset quality was reduced. Banks' balance sheet faced a major crisis. There were a lot of overstaffing in the banks. Similarly, almost CRR and SLR together, it was pegged at 50%. So basically, banking business in India became a nightmare by 1991. It is because of the excessive reforms of nationalization and excessive government control. So to handle all these things, Narasimhan Committee was introduced, and they gave certain recommendations. These recommendations are important. First thing is, they said that you reduce CRR and SLR. Your SLR is at 38.5%, you reduce it to 25, you reduce it to CRR also. Next, you need to maintain a capital adequacy ratio. I will talk about it, don't worry. So then you need to classify your assets. Till now, banks had very, very bad assets. So let us start classifying how many of you are bad, how many of them are worst, how many of them are even worst. So let us classify them so that we can start taking necessary action on the assets. Okay, so NPS are to be classified. Then they wanted to reduce the priority sector lending. As I told you, government was mandating banks to give more loans to a particular sector. So what Narasimhan committee said is that this is wrong. If you are directing banks to lend this much proportion, let's say you are eating up 50% of the money in the form of CRR and SLR. Out of the other 50%, 40% you want to be lent only to the priority sectors, that is weaker areas. From where can banks benefit? If the banking system is not well, industries cannot be good. I mean, you can't expect good industries, you can't expect robust businesses, then you cannot expect Indian businesses to compete with the foreign businesses that are going to come into this country after LPG reforms. So what Narasimhan committee said is that you reduce priority sector lending from 40 to 10%, and you also regulate the interest rates. They want to allow new private banks, and they wanted to give more freedom to the public sector banks. So this is the first set of reforms of Narasimhan committee, and the same Narasimhan committee was also appointed in the year 1998 again. This time the problems were that NPS were classified. For example, government said, bank said that all the assets that we have, we are classifying them into certain categories. NPA, that is non-performing asset. Then you have substandard asset. Then you have a bad asset. So in that manner, NPS, that is assets, were qualified, etc., etc. And there were still large number of NPS for banks. So what Narasimhan Committee 2 was asked to, or for that matter, the situation in 1998 when Narasimhan Committee came into picture is that, number one, there are more number of banks, and there was no one strong bank that could handle all the crises. There were a lot of NPS in this country. So Narasimhan Committee 2 was appointed. Committee 2 said that we have to handle NPS. So we are introducing an act known as SSC Act. At the end of the class, I will talk about what SSC Act is. So Narasimhan Committee said you will introduce asset reconstruction companies. The meaning of asset reconstruction company is very simple. Let us take for example, there is a bank. A bank has bad loans. That is, you are let's say a person A, B, C. Three people took loans. A took 100 crore loan, B took 100 crore, and C took 500 crore. All three of them are not paying any interest, and their asset is qualified as a bad asset. They are not paying back. Now, what bank can do is it can individually go and recover this money from these people, but they are not paying back. What Narasimhan Committee said is that you create one company, you call this as asset reconstruction company. What this company does is, this bank has bad loans, bad asset worth 700 crore. They will buy it. Let them buy all this 700 crore worth for, let's say, 400 crore. Okay, ARC will pay the bank 400 crore. Now ARC will use this 400 crore worth property. They will work on it. They will try to sell it outside. They will try to market it. So Narasimhan Committee came up with this kind of idea. Basically, a mediator who can absorb all the NPS from a bank, so that bank balance sheet can be cleaned up, and the same money can be used by the banks in one way. They are like, okay, fine. I know that we have to get 700 crore rupees, but anyways, we are satisfied with the 400 that we have. So banks are happy. There is one company who is now dedicated only for the purpose of handling bad loans. Such company is called as Asset Reconstruction Company. Narasimhan Committee 2 recommended for the establishment of a asset reconstruction company, and the same was established through an act which is known as SSC Act. Okay. So this is one thing. The second thing is, as I told you, there were no strong banks. There were so many multiple banks. Every bank had bad assets. So they had to merge all the weak banks, and they had to create certain stronger banks. So this was one thing that they recommended. They wanted to increase the capital adequacy ratio. I'll tell you what is it at the end of the class. Don't worry. So in this manner, they recommended certain improvements in the banking reforms. Similarly, they wanted bank boards. Over a period of time, this went to Bank Boards Bureau, where it's a body which will appoint the board, that is the board members of various banks. All those appointments will be done by a bureau called as Bank Boards Bureau. So in this manner, certain reforms were implemented. This is Narasimhan 1, Narasimhan 2. These are extremely important for your exam. Now, along after the Narasimhan 1 and 2, as I told you, there is one act that was introduced which is known as SSC Act. Securitization and reconstruction of financial assets and enforcement of security interest. The meaning is very, very simple. Banks can, so which papers ARC take and give money to RBI? No, RBI, ARC does not give money to RBI. ARC buys these assets from the banks. So let us come back to SARFAESI. SARFAESI Act is very, very simple. Earlier, that is before 2002, bank did not have the power to recover loans without the court order. Let's say you took a loan for 100 crore rupees, you did not pay, then bank had to go to a court. Court has to give an order. After the court order, bank will now come and recover the assets. This used to be the original way. But after 2002 SARFAESI Act, now banks can recover these money without a court order. That is the SARFAESI Act. Then there are some other plans that were introduced. For example, Indradhanush plan was introduced in 2015. This is one very interesting reform. So by the period of 2015, as you might be aware, banks were facing one major problem that is known as twin balance sheet problem. If you have ever heard of economic survey, or if you have read economic survey, you will know this word. India was facing a major crisis, that is, people took a lot of loans, they were not paying back, so banks were facing twin balance sheet problem. On one side, they had lot of liabilities which turned into bad assets and people were not paying any money, right? And the other side, there was a bad ARC that was trying to clear it up. On a whole, this was a lot of mess that was there. The whole lot of mess was created by 2015 itself. So in 2015, Government of India came up with another plan which is known as Indradhanush plan. As a part of Indradhanush plan, government said, chalo, you don't have any money, it's okay, we will recapitalize you, we will infuse money into your banks. Now on, you start performing properly, now on, you behave properly, so that you will not have any NPS. This plan is called as Indradhanush plan. Ideally, this is a very sad move because it is none other than your money and my money, the taxpayers' money, that was infused into banks which were behaving very recklessly and which were lending out loans very recklessly. After that, in order to increase the size of the banks, there was a bank merger drive that happened in 2017. For example, Bharatiya Mahila Bank was merged with the State Bank of India. Can anyone tell me what are the other bank mergers that happened? Can anyone tell me what are the other bank mergers that were happened in this period? One is BMB with SBI. Then there is one more with Syndicate Bank and Bank of Baroda were merged together. Then there was one more merger of Vijaya Bank. I think it is with Union Bank of India. Vijaya Bank, Union Bank and Andhra Bank, right? Yes, in SBI, in SBI, Bharatiya Mahila Bank was merged. And the SBI multiple, there was a State Bank of Bikaner, Jaipur, all these were merged into SBI only. Yeah, Vijaya Bank to Bank of Baroda, Union Bank and Andhra Bank were also merged, yes. Right? So this is the bank merger drive. The idea of bank merger is that if you merge banks, the balance sheet, the negatives that were there, the loans that were given, all these will be handled. That was the idea behind merging all the banks together. Then government also came up with a new code which is known as Insolvency and Bankruptcy Code. The idea of Insolvency and Bankruptcy Code is that, let us say there is a company. Company took a loan of 5,000 crore rupees and company is not paying back properly. Now, Insolvency and Bankruptcy Code is a mechanism in which you can replace the managers of the company, or for example, the board, the leadership of the company, and you can give a second chance to the company, see if the company can perform properly. If not, then you can sell the company and money is made out of it and the loan is paid back. Such mechanism is called as IBC, or Insolvency Bankruptcy Code, and the board that does this is called as Insolvency and Bankruptcy Board of India. So I gave a detailed notes about what is SARFAESI Act. Bank merger drive, we gave it here. Right, Punjab National Bank, Oriental Bank of Commerce and United Bank into PNB, Canara Bank and Syndicate Bank into Canara Bank, Union Bank and Andhra Bank into Union Bank, Indian Bank, Allahabad Bank into Indian Bank, and the SBI group of banks were also merged into SBI. Then you have Insolvency and Bankruptcy Code. This is one law to solve with all the problems of insolvency. Any company which is not paying back the loans that it has taken, you say that the bank has gone insolvent, or you can say that bank has gone bankrupt, or the company has gone bankrupt. They are not paying back. So in that situation, IBC will decide the procedure of whether you are taking the company into control, or you are changing the top leadership of the company, you are giving a second chance to the company, or simply you are liquidating, that is you are selling all the assets of the company and the loan is being paid back to the government, sorry, to the bank. So this code is known as Insolvency and Bankruptcy Code of India. You can definitely expect questions on Insolvency and Bankruptcy Code also. Right? This is about in IBC. I've given in detail about IBC. Please go through IBC. Now the last thing that I have to tell you, there is one more word that I have to tell you. Let me see if I've posted it or not. Just give me a moment. There are a couple of images, I think so. Give me one moment. I wanted to show certain images. Yes, I have these images. Good. Yeah. The other thing that I want to talk to you is about Basel norms or Basel Accords. So basically, there is something called as capital requirement or capital risk reduction that is necessary. World as a whole is growing, and the entire global system is dependent upon banks. So governments or banks together came up with a norm called as Basel norms. Okay, so Basel norms are rules which say that if you are a big bank, you need to keep some money, some more money as a cushion aside, so that you will not fail. The aim of Basel norms is that bigger banks should not fail. So those norms are called as Basel norms or Basel Accords. They are set of international regulations which say that yes, there are three Basel norms. Very good. So these say that there are certain minimum capital reserve requirement and you must maintain these requirements. This is called as Basel norms. Right. So this is one thing that I want to tell you. Next is about the NPS that I was telling. The loan that any bank give, you call it as a standard asset. Now it is not paid back in 90 days. You call it as, and within 90 days, if they are not paying on time, you call it as stressed asset. If the period is crossing, like beyond 90 days, they are not paying loan on time, they are not paying interest on time, you call it as non-performing asset. Then if the period crosses 12 months, you call it a substandard asset. If the period crosses more than 12 months, then you call it as a doubtful asset. This is the point. Okay, I'll upload these images in Telegram. You can check it out. This is one thing that I wanted to tell you. So this is about the monetary policy that we wanted to talk. Then there are two different words. One is government securities, the other is T-bills. Both, yes, I will explain. See, both are security deposits, or both are the security money that is there. But government security, the difference between government securities and T-bills is that usually government securities have a longer validity period. They have a longer validity period of usually more than 30 years, or approximately till 30 years, whereas T-bills will mature within 3 months. So this is one more thing that I had to tell you. Right. So these are all newspaper clippings which we can discuss on some other day. Okay, now the last thing, acha, they're all placed in these slides. Okay, they are placed in these slides, don't worry. Now the last thing that I have to tell you is capital adequacy ratio. This is a part of Basel norms. The meaning is, let us say, bigger is the bank, the more money you need to keep aside, the more capital you need to maintain. Capital adequacy ratio. Based on the size of your NDTL, based on the size of your bank, you need to keep certain money away for worst case scenarios, so that your bank will not fail. So they are called as capital adequacy ratios. So this is about CAR. This completes our topic money and banking. They are asking lot of questions on money and banking. Along with that, in economy, certain topics are very important. Number one, LPG reforms. I spoke at length about LPG reforms for a period of 10 minutes to 12 minutes, I guess. So LPG reform, we spoke in detail till now. Yeah. We spoke about LPG reforms for 10 to 15 minutes. Now, along with that, 2025 is 75th year of Industrial Policy 1948. In steno exam, there are n number of questions on industrial policy. So you can definitely expect your questions on industrial policy as well. Industrial policy of 1948. You can expect good number of questions. Along with that, they will ask you questions on LPG reforms. Yeah, I told you. Then you will be asked questions on Green Revolution, Green Revolution Phase 1, Green Revolution Phase 2. So overall, in economics, you need to be good at microeconomics, which we have completed. And you need to be good at monetary policy and banking, you have completed. Then you need to be good at 5-year plans. 5-year plans is a static topic, and as far as I remember, I posted a notes of 5-year plans in the Telegram channel. Let me check it out once. 5-year plans, if I have posted, I'll open it up and I'll discuss in brief here itself. Yes, 5-year plans, I have posted it in detail. Let me open this once. Okay, so this is your chapter on 5-year plans of economy. This is very, very important as a part of 5-year. Yeah, 5-year plans is extremely important. India originally went for planned economic model or socialist model, where government used to decide the entire developmental policy. Government will say, for the next 5 years we are focusing on heavy industries. For the next 5 years we are focusing on agriculture and irrigation infrastructure. For the next 5 years we are going to focus on something else. So in this manner, government used to decide in these 5 years which sector will grow, to which sector we are allocating more money, to which sector we are allocating very less money. This planning is called as 5-year plans, and this planning was done by a body which is known as Planning Commission. They are asking you good number of questions on 5-year plans, right? So we set up our Planning Commission first time in 1950, and there are certain aims of 5-year plans. In 5-year plans, they will ask you the plan details. For example, the first 5-year plan focuses on agriculture and irrigation. Why? Because in the first 5-year plan, that is by the year of 1951, we did not have food self-sufficiency. We were importing wheat from USA under the famous PL48 program. We were importing wheat, we were importing food material. So India wanted to be, no, there is no relation between SLR and CRR. No, it is CA. No, there is no relation. So India wanted to be food independent. The first 5-year plan is all about food and self-sufficiency, and this model is called as Harrod-Domer model. They will ask you these kind of questions, and once the food self-sufficiency is achieved, and in this part, as a part of achieving food self-sufficiency, the major problem to get to produce more food is about the availability of water, because India is dependent on monsoons. We have perennial rivers, but the entire South India has got peninsular rivers, and you might not have, for that matter, we don't have enough amount of water to grow 3 crops a year. Unless we grow 3 crops a year, we will not achieve food sufficiency. So for that matter, Government of India wanted to focus on large scale dams, because if you construct dams and if you can protect or you can stop water, then you can ensure the availability of water throughout the year. So as a part of first 5-year plan, government introduced and they have built lot of dams, etc. And so some famous projects are Bhakra Nangal Dam, Hirakud Dam, etc. Then second 5-year plan, once food is good, the next thing is that we wanted industrial growth. Now, to have industrial growth in any country, you have two options. One is socialist pattern, where government is establishing bigger industries. Government is the leader of the industrial growth. The second model, where market is the leader of the growth, or market is the industry, the private market is leading the industrial growth. So in India, the situation was that we were favoring the socialist model. So India went with more of public sector oriented industrialization. So as a part of second 5-year plan, which is also known as Mahal-Nobis model, there was emphasis on heavy industries. India was establishing lot of PSUs. We were building lot of steel plants, etc. Bhilai, Rourkela, Durgapur steel plants. Please prepare these steel plants and the foreign collaborations that are there. So we were establishing all these steel plants, etc., etc. And as a part of this plan, again agriculture was neglected, so there was food shortages. Then the third 5-year plan, India faced multiple wars during this period, and there were severe droughts. So this plan they could not implement this plan properly. There were wars, etc. And there is a lot of drain with respect to resources, so they could not do this. Then there is a plan holiday period. As I told you, there are wars and all, so they did not go for any plans. There is a plan holiday or a break period. Break period, they went with annual plans. Now the fourth 5-year plan, again, we were facing drought. We faced wars. In the first 5-year plan, we got food self-sufficiency, but it was not enough. We did not have food. Again, we had to go to USA. We were asking for food, etc., etc. So seeing all these things, India took this as a challenge, and they thought that Indian government thought that we need food self sufficiency at any cost in this plan, and that is how green revolution was introduced in India as a part of fourth 5 year plan. At the same time, as I told you, government of India wanted banks to be available to the village communities, that is to the remote communities, because our focus was on agriculture. If we want to grow agriculture, we need banking sector in the villages. So for that purpose, government of India said we are nationalizing all the banks from now on. Whatever banks are there are government banks, and government will decide which bank branch will be opened in a particular village, and in that manner we will ensure that we are introducing green revolution. And because green revolution demands lot of inputs, green revolution or the high yielding varieties of seeds, etc., that is a highly demanding input oriented farming. So because of that, farmers need lot of loans, so we are nationalizing all the banks, and we are ensuring that there is credit availability in the country. So for this purpose, in as a part of fourth 5 year plan, number one, green revolution was introduced, and the other thing is nationalization of banks was done, so that there is good reach. Next, after this, there is global oil prices. Inflation was increasing in the country, unemployment was increasing, there was lot of poverty in the country, and Indira Gandhi was also facing certain political crisis. So she came up with a slogan called as Garibi Hatao, and they introduced a lot of programs to remove rural poverty, and they wanted to implement rural employment scheme. If you know properly, this is a phase where government of India, government of India went with emergency, etc. Next is the Morarji Desai government. They did not introduce any 5 year plans, etc. And after 1980, Indira Gandhi came into power, and here onwards, it will be poverty eradication, modernization of technology, etc., etc. All these will be implemented slowly and steadily. After 1991, the importance of 5 year plans start getting reduced, because in 1991 India launched LPG reforms, and then the importance of plans gradually reduced, and by 2014 India completely removed the process of planning, etc., etc. So India removed planning commission altogether. So last 5 year plan that was there, that was introduced in 2012, was completed, and planning commission was completely replaced with NITI Aayog. There are a lot of reasons why planning commission was removed and NITI Aayog was replaced. One, planning commission became a very big white elephant. All these activities that planning commission was doing, it started controlling all the states, it started controlling the finances, and unfortunately planning commission is neither a statutory body nor a constitutional body. It was a mere executive body, and the entire country's finances were being decided by a executive body. And planning commission was established in the phases where government of India was following a socialist model. But in 2014, government of India started adopting a ease of doing business, where government is coming out of the market space and it is becoming an enabler. Government is becoming an enabler, government is becoming a facilitator of business, and government wants private businesses to thrive. So in that ecosystem, the older version of planning system is not compatible, and we wanted more federalism, we wanted more states to involve into decision making, and we wanted a think tank which will advise the government on various advanced issues. So considering all these things, planning commission was wrapped up, and it was replaced by a body called as NITI Aayog, which is National Institution for Transformation of India. Right? It is NITI Aayog, which is the think tank. So this is about 5 year plans. 5 year plans topic is also extremely important. And then as a part of economy, the other topic that is important that you need to study is fiscal policy. And if I am not wrong, we uploaded fiscal policy as well in your Telegram. Yeah, fiscal policy is also uploaded. Even NITI Aayog is also uploaded. You can check it out. This is a fiscal policy document. Fiscal policy is very simple. It is about taxation. They might ask you questions on taxation and GST, how GST is introduced, what are the slabs, and worst case scenario, they can give you a particular item and they can ask you in what GST slab this belongs to, because there is a discussion that is going on in this country where government is planning to reform the GST slabs and they want to reduce the number of slabs, etc. So fiscal policy is all about taxation and spending. As a part of fiscal policy, you need to study one topic, that is What is capital expenditure? What is revenue expenditure? I will tell you the difference between capital expenditure and revenue expenditure. It is very, very simple. The day-to-day expenses of any government, you call it as revenue expenditure. If the government is buying something, if the government is creating any kind of assets, then you call it as capital expenditure, right? So government has expenditure, government has revenue. You have revenue, you have expenditure, and the difference between revenue and expenditure, you call it as deficit. The deficit, which is a part of fiscal policy, you call it as fiscal deficit. The fiscal deficit is a total expenditure minus total borrowings. This is your fiscal deficit. Then revenue deficit is nothing but revenue expenditure minus revenue receipt. Revenue form of money, that is the day-to-day income that you are getting, minus revenue expenditure, you call it as revenue deficit. As a part of revenue receipt, you will not calculate the loans that are taken by the government, right? So these are the types of deficits. They will ask you, please go through this table. This table will summarize fiscal deficit, revenue deficit, and primary deficit, etc. So this is a small short notes on fiscal policy. Along with that, there is also one more short notes that is needed for economy in Telegram. That is about your NITI Aayog. There is one more small notes on NITI Aayog. This notes is also important. This notes is also relevant. This is a very small notes. I think it is for 1 to 2 pages. In this, there are certain programs. If you see aspirational districts program, this question was asked in your steno paper. This question was asked in your steno paper, and if I'm not wrong, we posted this notes long ago on the Telegram channel. I don't know, I don't clearly remember the date. Okay, I don't remember the date exactly when this is posted, but this was posted long ago. Okay, so the meaning is that the topics that we have posted in the Telegram channel, it was posted in the month of August only, but I don't think I can, the date is available. Chalo, leave it. So the point is that the notes that is posted in your Telegram channel is very relevant. This aspirational districts program, the question is asked in steno paper. So this document is of 3 pages or 4 pages. In the first part, I spoke about the origin of the NITI Aayog. As I told you, it is also an executive body. It is a think tank. It was announced by the Prime Minister on 15th of August 2014 from the Red Fort, where he said that we are scrapping the Planning Commission. So the objective is to promote federalism. It is to promote the partnership between centers and states, and it has to act as a think tank. That is it. The objective of NITI Aayog is to aid and advise the government. Okay, the objective is to aid and advise the government. This is a composition. This is very important. They can ask you the questions on composition. Chairperson is the Prime Minister himself. The vice chairperson is appointed by the Prime Minister. They can ask you, who is the vice chairperson of NITI Aayog? Who is the current vice chairperson? Who is the current vice chairperson? Can someone tell me? Yeah, I'll talk about it at the end, Harsha. Give me 2 minutes. I'm at the point of completing these topics. Yes. Suman Berry, it's also a new appointment. They can ask you this question as well. Then full-time members, part-time members, this is about the composition. Then these are important. For example, NITI Aayog publishes certain reports. They can ask you the reports that are published by NITI Aayog in your exam. First report is Sustainable Development Goals India Index. This will track what kind of sustainable goals are being implemented. How is India performing? Can we achieve our sustainable development goals by 2030? That is a target year or not. So this is about SDG index that is there. Then they also publish one more index, that is National Multidimensional Poverty Index. It's good to know SDGs. It is good to know SDGs. Yes. At least what are the SDGs? It is good to know. Then you have National Multidimensional Poverty Index. This index tries to measure the standards of living of people in multiple dimensions. Let us say health, education, standard of living, etc. So they can ask you these sub indices. In one question of steno, I noticed that they were asking to improve a particular report or to particular index, what sub parameter has to be improvised. So they are asking you questions of that standard. They are asking you questions deeper in steno paper. Okay, so we will start doing important questions and expected questions from tomorrow. Don't worry. right? So this is about the Niti Aayog related indices, etc. Please make sure you practice these. Atal Innovation Mission is one more program. National Health Stack is one more program of Niti Aayog itself. So this is about Niti Aayog and the related activities of Niti Aayog. So this is about today's class, right? So this is about today's class and the economy and the other related aspects. This primarily completes the brush up of economy. Please ask me if you have any questions that you want to talk to me. Let it be mentorship, whatever questions that you have that you want to ask me with respect to SSC exams, you are free to ask. From tomorrow onwards, we will just a second, yeah. From tomorrow onwards, we will start taking up important questions, expected questions based on the steno paper, and we will solve the questions and the other topics that are there around the questions. As far as space technology class 2 is concerned, I will record it and I'll upload it. That is about tomorrow's topic. Now, Harsha had one question. Harsha, can you please repeat your question here? I will talk to you, but please repeat your question. Geography one class like this, please. Slowly we will plan, but the problem is that the number of people who are attending for the classes like this is very less. I have hardly 26 people who are attending for a full class, but people are asking for important questions. So yeah, we will see, but mostly on YouTube we will continue with questions only. So is there anything else for us to discuss, or can we call it a day? You're not, hi Harsha. Harsha, you're not able to manage all the subjects. You want time management. What is your target year? 2025? No, you are not, Satya. You're doing a very good job. Making notes from these PDFs is absolutely good, and it is absolutely necessary for you to do this. And trust me, there are questions that are being asked from these PDFs. For instance, I've shown you one question, one image I've posted in Telegram where I was showing you the population pyramids. We discussed about population pyramids as a part of our geography class, and the question was asked in your exam. So these PDFs are very good and very relevant. You can make notes from these PDFs. It is absolutely good. And as a part of our upcoming course of GS, that is as a part of our upcoming course of GS, or for that matter BrahMos course, I will teach you how to make notes, and I will make you notes. I'll make you write notes. I'll not simplify everything, and I will not spoon feed you. I will teach you how to make a notes, and you will make notes as a part of the course as well. So you need to make a notes. Harsha, arithmetic you're feeling difficult, and you are handling 20 questions in all the subjects together. Are you handling 20 questions in all the subjects together, Harsha? See, if you're handling only 20-25 questions from all the subjects together, which means that you are a beginner, dear, you have to complete your syllabus once. Right? This is not the time to rush for the exam, especially if you are not able to handle more than 20 to 25 questions in all the subjects together. So my sincere suggestion is, take a step back and complete the syllabus first. Handle the complete syllabus, then you can handle the questions. Yeah, these kind of classes mostly they will be done as a part of course, but at this moment we will be doing previous year questions, or sorry, important questions and expected questions, and as a part of the questions I will teach you the concept that is there around the questions, and at this moment I believe that that is necessary. Yes, Rajeshwari, all the subjects are covered as a part of BrahMos course. You will have GS, English, and as a complementary to it, we are giving you analytical reasoning and maths as well. Just that in maths, we are giving you completely handwritten notes. In maths, we are not digitizing, we are not typing anything. For maths, we are giving you only handwritten notes. For GS and English, we will give you whatever is necessary along with the daily tests and sectional tests, etc. etc. Along with that, BrahMos is going to be a guided program there where we will tell you today is day 0, you have to do this. Your video is uploaded in this particular folder. Watch this video, write this notes, etc. etc. So that is a guided program. Sindhu, if the exam is in September, we should get the schedule by now. See, ideally, if the exam is from 10th of September, you should get the schedule by now. And as I told you just before the class, there is one person who messaged me on Telegram saying that there is some news from DOPT department, friend, that exam is postponed to October. So that is one news that I just got, one message that I got. I am not sure, I could not verify the source back. I texted the person, they did not reply. So if I can verify the source, then definitely I will tell you that this is the exam update and this is the situation. But ideally, if the exam is from 10th of September, you should get a schedule by now. So you can assume that you have good amount of time. Are there any other questions that we need to discuss, or can we call it a day? So this completes our economy, right? We have completed our economy as a part of, I think we have done, see, we have done 5 lectures and all the lectures are available on this channel. We have completed microeconomics, we did macroeconomics, all the concepts of macroeconomics, then we did monetary policy, and at the end I told you about the LPG reforms part. We discussed about 5-year plans, and we saw NITI Aayog, we finally saw fiscal policy as well. So this completed your economy module. You're getting 130s in marks. Yes, Satya, if you're getting 130s in marks, Satya, if you're getting 130s in marks, stick to 2025 plan. Absolutely. I know that there is a lot of chaos around us, but if you are scoring 130, stick to 2025. Do not enroll in any program. Stay focused. Do whatever you're doing and analyze your mock scores, and whatever minor changes that you need to do, improvise them. You can definitely do wonderfully in 2025 itself. Geometry classes which I taught are really a game changer. I will teach the math in Brahmos, Kedar, and thank you so much for the compliment with respect to geometry classes. Thank you so much, and I will handle the entire maths part of Brahmos. Yes. Thank you so much for all the positive words. Rajeshwari, is it possible to? Yes, you can definitely handle. See, as a part of Brahmos, we took enough care to accommodate the people after CGL if they want to come in. In Brahmos, what we are doing is that we are allocating 2 months exclusively for absolute beginners who are beginning their journey. As a part of first 2 months, we will teach them the very basics, that is from 6 to 10 standard NCRTs. And if you are giving examination this year, I am very sure you have covered all those portions. So if you are giving CGL 2025, you can check back Brahmos after CGL 2025. There is no problem at all. You can definitely catch up, and all the advanced portions will commence after 2 months. So by then the foundation would be done. You can just watch the foundation at 1.5x and you can join everybody. No problem at all. All the classes will start from 15th of September. Yes, all the classes will start from 15th of September. No problem. No issues, Rajeshwari. I have got your GS covered. You can come with us and you can handle, we will handle GS together. The score and percentile changes from mock to mock. Which source should I consider? Can you please elaborate it? Let's see, Satya. Let's see how it goes. Suganya, can you please elaborate your question? Your score and percentile is varying from mock to mock. Ideally, no private mock is matching the educative pattern, but definitely, yes, you can consider some of them. You can take an average out of it, but don't be bothered so much about those scores. Those scores are not so important at this point of time, and as I told you, nobody is matching up the actual pattern. So yeah, take it with a pinch of salt. To complete GS for 2026, I need 5 months of your time. 5 months, daily 2 hours. We will complete GS for the upcoming module. In the upcoming modules, the plan is that initially we will complete GS, English and the foundations of mathematics. We will do this first. Then we will proceed towards the actual syllabus of maths. That's the plan. By the end of 2025, we will complete GS, English completely and the basics of foundations of mathematics. In that manner, you will be tier 2 ready for GS and English by the end of this year itself. My objective is simple. In English tier 2 of 2026, you should score 135 out of 135. And in GS, you should score 60. So we will do this by the end of this year, and along with that, we will have a solid foundation of mathematics. Once this major chunk is completed, then we will go to the approaches of maths. That is the plan. Vandana, sir, I'm getting 48 in maths and 42 in reasoning and 40 in English. My GS score is 15. How to increase my score? Vandana, if you're scoring 48 in maths, 42 in reasoning and 40 in English, you are doing very, very good. In GS, all you need to do is very simple. Focus on the important areas only. From tomorrow, we are doing expected questions, you can follow that series. And today I posted a video on the important topics of GS. Just make sure you go through the checklist, and if you cover all those topics, you can definitely score 25. And believe me, if you are scoring 48, 42, 40 and 25 in this upcoming CGL Tier 1 of 2025, nobody can stop you from clearing Tier 1. You can definitely attempt Tier 2 and you can do well. And as far as I know you, I have seen you from your day one. I've seen you in the day one when we were talking about cracking MTS by the end of this year in my English classes. And from that day till today, I must appreciate that you have done a tremendous progress and your scores are really remarkable. Because that I know you personally from my classes, I can definitely tell you you have improved a lot and you can clear the exam this year itself. So this is what I have to say to Vandana. So this is all for today. See you all again tomorrow as a part of expected exam question series. Till then, yeah, bye bye.